on www.bita community.org. This has been a very successful part and addition to BITA, and so far we've had some very useful material information communicated. We continue today. I'd like to introduce you to Mark Mockler again from Evans Mockler to give us an update on the financial situation with COVID-19.
Okay, guys, so there's some questions coming through, but I'll just give a very brief preamble. I was chatting beforehand with Dan. Historically, construction has been sort of first in and first out of a lot of recessions. It looks like this time around, it's probably going to be last in to the COVID-19 recession and hopefully first out. So that's certainly all the signs and indications that we're picking up. And that would also probably be similar to the situation in Italy, Spain, and the other Western European countries. So that's encouraging for people who are construction focused or construction orientated. So yeah, I'm happy to take any questions, Paul, as and when they arrive. Probably easier for people if they sort of come in categories, so that we can, rather than jump around too much, but whatever as and when they arrive, I'm happy to field them.
Right, we have a few coming in at the moment on the job retention scheme. The scheme rules seem to be changing regarding dates and eligibility. So what is the latest position on that, Martin?
Okay, well, I think that in fairness to HMRC, that there have been a lot of changes. As I mentioned before, this was really legislation on the hoof. The word furlough is it's a brand new introduction to the language in the UK. They've spent a lot of time having to develop the sort of systems and the website, etc. The portal went live yesterday, which was good. There was changes announced last Wednesday, which both positive. One was that the scheme has been extended formally now to the end of June. Originally, it was from the beginning of March until the end of May. They've now added a further month. Probably the reality of the economic situation is that there's going to be plenty of businesses that won't be operational at the end of June. And obviously, I'm thinking of leisure, hospitality, retail in that category, not necessarily construction. But anyway, so that's an extension, which is good. And also, the other thing that was important was the relevant date for furloughed staff moved from the 28th of February to the 19th of March. Now, that, again, a positive move. We ourselves had clients who engaged new employees in early March. And up until last Wednesday, they fell between the cracks, essentially. So the new date is 19 March. Now, again, because it's so fast moving, there are some anomalies even with that date. What HMRC have said is that if the employee was on the payroll and an RTI, so that stands for real-time information, that's a submission that you do monthly, or your payroll clerk or company will do monthly. If an RTI was filed on or before the 19th of March with the employee's name on there, then they can participate in the furlough scheme. However, the practicality of that is that most companies run their payroll monthly, and even if you run your weekly payroll, you still file your return monthly. So immediately there is a problem, because if you, and we have an example of this in our client base, an employee who starts on the 6th of March, and the new rules say he can be furloughed because it was before the 19th of March. However, he's a salaried individual, so March payroll was run the end of March. The RTI was submitted on the 19th of April. So he's not going to, on the face of it, be admissible on the HMRC website. And that happened. Yesterday, we tried to submit a claim for him and it was rejected. So we are having to try and contact HMRC. Their web chat advisors are all busy. Telephones are ringing off the hook. The reality with HMRC is that they're firstly quite impacted by COVID-19. There's a lot of illness in their ranks. And secondly, they're working from home. So they hadn't planned for remote working, so their systems aren't functioning as well as they should be. However, it's to be expected. There are going to be teething problems. This is very fast moving, so there will be wrinkles to iron out. Another very small point in relation to this is that there's also, believe it or not, a technical dispute between HMRC and Sage, because Sage run most of the payrolls in the UK. And it's to do with how the furlough calculation is actually punched out and how the numbers work. That will be resolved tomorrow, we're told. So we're expecting a sort of some white smoke just to iron that out. Again, just another example, you know, the website went live, you would expect that it would be operational and would work as expected, but obviously, you know, there's teething problems. So yeah, so they're the changes from the original, you know, the original scheme. I'm sure everyone knows at this stage, HMRC would pay up to £2,500 per month, which is with a cap of say 80% of an employee's salary. So there's no need for me to go over the main scheme rules unless someone wants to know the detail.
Okay, very interesting question from a point of view of a technicality. For an employee who was furloughed on the 1st of April, does this mean the claim can only be the 6th of April as the first full week? So that's kind of like a clouded, a grey area in terms of when a lot of people took it at the start of the month, but the start of the month started on a Wednesday. So is that a claim for, do you miss that first week? Or what
no, it's from the date of the claim. So the furlough scheme in principle is done by agreement. So you have to engage with your employee. So, and good practice is that you give them a letter to record that consent. So whatever, you know, that letter will enshrine the date of the furlough period. So if it's a Friday or Monday or Tuesday, it doesn't matter. That's the date the furlough clock starts ticking. And you know, there are some important issues around time frame, but there's no ambiguity as to the date. It's whatever date you and the employee agree, and the furlough from that point. If that is the end of the second week in the month, then they're a normal employee for 2 weeks, and they're a furloughed employee for the remaining 2 weeks of that month.
And in terms of furlough, for instance, we've seen an extension on the time frame in terms of lockdown. Does that mean you have to reapply after the first term, or does it just continue as the lockdown continues?
No, so the furlough scheme is in 3-week blocks, which again, we're not sure why HMRC chose that time period, but they have done. So if you furlough somebody, for argument's sake, on the 1st of April, then that furlough block is until the 21st of April. Now, you can take them back as a standard employee during that period. So, for example, on the 16th of April, you could say that furlough period ends, but you won't get any furlough grant at all. This is an important point. These are 3-week blocks. So if you want to be able to claim a furlough grant on behalf of one of your employees, they have to be furloughed for a minimum of 3 weeks. And following on from that, if, for example, at the end of that 3-week period, you know, you should put them on notice that you're going to extend the furlough for a further 3-week period. But if, same principle holds, if on, say, week 5, you reclassify them as a standard employee, then you won't get any furlough grant for weeks 4 and week 5. These are 3-week blocks, so you get paid for a full 3 weeks, you get paid for a full 6 weeks, or a full 9 weeks, but not anything less than that.
Okay, a comment here from John Fitzgerald. Does Martin have any comments to add on the startup funding that has been approved by government, especially around the details and the pros and cons?
So, John, I'm going to cover CBILS, the Coronavirus Business Interruption Loan. Yep. Okay, so yeah, so there's sort of 3 classifications. I won't spend any time on the 2 larger ones. The COVID-19 corporate finance scheme is for very large companies. The what we're calling the SLIBLS facility, the Coronavirus Large Business Interruption Loan Scheme. Not that easy to say. Again, that's for larger companies. Your turnover has to be more than 45 million, and if your turnover is between 45 million and 250 million, you can claim up to 25 million. And if your turnover is between 250 and 500 million, you can claim 50 million. Again, you know, we've got clients in that bracket, but the reality is that most clients will be claiming under the lower end of the range, which is the SEOSS facility, Coronavirus Business Interruption Loan Scheme. So that scheme is operational. We've had clients who have received funds under it. It is slow. It's slow because there was a lot of teething problems initially in terms of the banks. They were resistant to there was issues around personal guarantee. I've mentioned on here before that the banks felt that this scheme was, because it used to be called the Enterprise Finance Guarantee Scheme, the banks lost money under the old EFG scheme, so they were quite reluctant to embrace SEOSS when it was first announced. However, to bring us right up to date, the position is that the loans are live. The banks are, different banks are taking different approaches. Part of the problem is that the banking staff themselves are overwhelmed. The credit committees, you normally have a relationship manager who would have a standard credit committee sort of go-to person he would speak to. They would know each other. They could get loans approved in normal time frames. Most of the banks are A, working from home, B, a little bit understaffed because of illness and self-isolation. So what's happening is that the applications are going into a central pool for most of the larger banks, and there's a lead time, and then they're being picked up by somebody who doesn't know that client, doesn't know the banker who proposed the scheme. So it is slow, and then the information requests, you know, if your relationship banker hasn't submitted a nice tidy package and there's more information required, and that individual has to, the credit committee guy goes back to the banker goes back to the client. So what in that area, what specific information do we need to provide in terms of application for those loans? So certainly a good rule here is to over provide. There's no point going in half-cocked because it's just going to lead to delays. So our minimum documentation pack that we're putting together for clients are the last set of accounts, so year-end accounts, up-to-date management accounts. So if there's a large gap, so if your year-end was sort of March 19 and you haven't, there's no point giving the bank March 19 accounts, you're going to have to give them something up-to-date. So, management accounts of September or December, ideally. Then in addition to that, you need to give them a cash flow forecast, and ideally for 6 months, to indicate what your cash flows, positive and negative, are going to look like for the next 6 months. But the most important element, as well as that financial information, is to be able to demonstrate the serviceability of the debt. Because I've got plenty of anecdotal examples of people who felt that they should have been able to receive a SEOSS loan and asked for 250 grand, whatever the figure might be, but their profit and loss account or the cash flows didn't demonstrate that they could service that debt. So now you can ask the bank to give you a holiday for the capital element of the repayments. And as you may know, the government are paying the interest for the first 12 months anyway. But it's important to understand that, the due diligence that's being carried out by credit committee, they will look at this as if it's a normal loan. They'll want to put it through. But if they get it wrong and they submit an application to the British Business Bank, who are the government's bank, and that loan goes bad, and they make a claim under the 80% guarantee, and the British Business Bank send out their auditors and look at the file, and if there's mistakes made, then the British Business Bank will say, we're not paying your guarantee. So the bank will suffer 100% of the debt. So this 80% guarantee, it sits there, but it sits there as long as the credit committee do their due diligence. The other point that's important to make in relation to what documentation you need, as well as the financials, it's very important to provide some commentary in relation to the company. So you're demonstrating that A, this was a viable business up to the point of the lockdown, B, there's enough work ongoing once you restart, and C, there's plenty of evidence that you're going to win future work once the lockdown is lifted. Because that's a key test for the bank, that this business, apart from the lockdown, is a viable business. So, so they're the key elements of that pack that needs to be provided. The banks want to lend this money as long as you can tick those boxes, and it's important that you do and you try and get it right first time.
Okay, another question that's come up here is, my bank has said that I have a very always poor credit risk, so nothing has changed during the crisis. In that, what should I do now?
That's difficult, Paul, because the banks aren't throwing this money out the door. And as I mentioned a minute ago, if the bank are making lending decisions to businesses that aren't creditworthy, then and if that loan goes bad, then there's the 80% guarantee that they claim, it may not be paid if they shouldn't have made that decision. Now, so if your business is being badly treated by the bank and you can demonstrate you have a good business case, and for whatever reason, either it's a smaller bank and they're misinterpreting the legislation, or they're just being uncooperative, you can make a complaint to the Financial Ombudsman Service. But again, that's not going to be particularly quick. Now, this scheme, the civil scheme, allows you to go to different lenders. So it's certainly true that the easiest way to make your application is to use your existing lender, because you've got an account open, they know your history, etc. But if you feel you're getting badly treated by your bank, there are 40 plus lenders now accredited for this scheme. You can go to another lender. Now, there are banks who aren't in the scheme, AIB actually being a good example, but the majority of UK lenders are in the scheme. So I would say, if you feel you've a good case and your business has been interrupted, it was a viable business, then if your bank is rejecting you, A, make a complaint, but B, approach another bank.
Okay, and moving on to the self-employed income support scheme, we engage a large number of skilled subcontractors. So will they all qualify for the SEOSS grant each month?
Okay, so the second part of that question is each month. It's not a monthly grant. It's going to be paid at the end of June. So people can qualify if they're self-employed, but there are some catches. And again, you just need to be careful about this. One of them is the average income can't be in excess of £50,000 per annum. Now, we have a client who had self-employed profits in 2019 of £27,000. But in 18 and 17, his profits were 60 and 70 grand. And actually his average for the 3 years is 57,000. So he's just over the limit, but he won't get any money. It's a cliff edge limit, which is unfair. And he's an example of someone who's going to fall through the cracks here. So an important test is your average income less than £50,000 for the last 3 years? And if you've got some high earning, sort of somebody who's in the reinforced concrete frame sector and they're working 6-7 days a week, quite easily they can be taken home, or certainly showing profits of 50 grand a year. So that's one test. But as long as they're self-employed and their profits are below £50,000 per annum, and they have filed a 2019 tax return, then they will qualify. Now, the last point is important. The 2019 tax return was due for filing on the 31st of January 2020. HMRC have extended the filing deadline until the 23rd, so Thursday this week. So anybody who is a subcontractor who may not have filed their tax return for 2019 has until midnight on Thursday to get that filed. Okay.
And in terms of it, going back to the same subject, how do I apply for the SEOSS money?
So the SEOSS is a very complicated scheme. We actually haven't had the detailed technical guidance yet from HMRC. So it stands for the Self-Employed Income Support Scheme. But it is slightly different to the equivalent furlough scheme for employees. I'll give you an example. You can work during your SEOSS period. So your subcontractors are able to work and claim grants. From an application point of view, HMRC have taken an approach of don't call us, we'll call you. So they're going through their system, and sometime in the middle of May, they will email all self-employed individuals who are entitled to claim under the scheme. And once you've had that email, then the subcontractor can submit an application online and claim the grant. In any event, that grant won't be paid until the end of June at the earliest.
Okay, another interesting question is I've turned down some small jobs recently as I'm hoping to get to 2,500 per month under the SEOSS. Did I do the right thing?
So the answer there is no. Going back to my previous point, unlike furloughed employees, you can work under the grant scheme, under the SEOSS grant scheme. So again, just to avoid any doubt, furloughed employees should not carry out any work during the furlough period, but self-employed individuals can work during this grant period. So anybody turning down work would be doing the wrong thing.
Okay, another question in terms of a client who has a liability that they've paid tax in advance of the payment that was meant to be paid in May, can they now ask for HMRC for that money back because they paid early?
Say that again, Paul. What tax are we talking about here?
I would say it's corporation tax.
Unfortunately, no. If you've paid the tax, you won't get it back. You know, HMRC would say to you, if you need money, then you need to approach your lender and submit a SEOSS application. If the money's gone, then there's no way HMRC will refund it just because you paid early.
Okay, and in terms of HMRC liabilities, my accountant said that I can waive my VAT liability, but I have to pay my PAYE, NIC, CIS. Is that right?
So the VAT liabilities have got an automatic deferral. So yes, that's correct. The VAT is deferred. There's no automatic deferral for PAYE or NIC or CIS. So technically they're payable. However, if you have cash flow problems as a result of COVID-19, then you simply call the COVID-19 hotline and you tell HMRC you've got a cash flow problem, you want a time to pay arrangement. As I've mentioned on here before, HMRC are spending about 90 seconds on every call. There is no problem getting time to pay arrangement, and the standard response is, that's fine, we accept what you're saying, please contact us towards the end of June to let us know what the position is, because by that stage they owe at least 2 months PAYE, CIS, maybe even 3. And that's another important point actually in relation to the CBILS loan applications. I've seen a number of banks looking at cash flows and saying, why are you paying HMRC your monthly liabilities? And the businessman, the director, is saying, well, actually, there's no automatic deferral. But the banks are saying, well, we know there's no automatic deferral, but if you phone HMRC, they give you time to pay straight away. So don't pay the Crown debt, ask for a time to pay arrangement, and that reduces the money required with the CBILS loan. So I've seen, as I said, I've seen banks pushing back on that and telling people to claim all available reliefs, claim your repayment holidays, claim your deferrals, ask for your time to pay arrangements, and then determine what cash you need to keep the business operational.
Okay, we always pay our VAT by direct debit, so do I need to do anything as the next liability is due on the 10th of May?
Okay, so that's an important point. So the answer is yes, they really do need to do something, and that is cancel the direct debit. So I know an example, actually, believe it or not, an accountancy firm, not us thankfully, who paid their VAT by direct debit on the 10th of April, and one of the partners is suffering a lot of slagging from his colleagues because the direct debit wasn't cancelled. So HMRC have quite clearly said that their systems, they can't update the system to cancel direct debits from their end. They haven't got the manpower. Some businesses are paying the VAT. So really important, if you pay by direct debit, cancel the direct debit at your bank. All other issues in relation to the VAT deferral are fine. You don't have to obviously pay, but if you claim, there's no automatic claim for deferral. And importantly, a bit like the corporation tax question, if your VAT goes out of your bank by direct debit, that's it. You won't get it back.
Okay. And in terms of what you've seen in the last, we'd say, 48 hours in particular, do you see any changes in terms of like the lockdown dates now coming into vogue in terms of where we can see the first restrictions being lifted. There is a sense around that we're hearing about a lot more sites opening up and all of this kind of stuff. So are we starting to seeing light at the end of the tunnel?
I think there's light, Paul. You just got to be careful. It's not an oncoming train. I think certainly if you look, there's a lobby at the moment to classify construction as key workers. And, you know, I would have some sympathy for that as long as the construction activity is being carried out outdoor. But yeah, I think that the sort of the mood music I'm referring to construction. The mood music in the sector is positive. We've got plenty of clients who are tendering for jobs, pricing jobs. You know, a lot of the sort of white collar activity can be done remotely. QS is working from home. That's all coming on, or taking place rather, in the background. I do think, as I mentioned earlier on, construction is probably going to be last in and first out of this. And again, if you look at the comparable jurisdictions in Western Europe, that's been the case there as well. So, you know, I do think from a wider point of view that the government will be slow when they start easing restrictions. It'll be baby steps. So I think it'll be schools and local shops, perhaps. Again, that'll be similar to what's happened elsewhere in Europe. I don't see a wholesale lifting of the lockdown and everything returning to normal. I suppose the reality is, and I'm not a medical practitioner, but the reality is until a vaccine, you know, normality can't return really. But yeah, I think most people would think we're at least halfway through this in terms of lockdown. But I think people talk about the peak, and they have a mental image of the Matterhorn or Mount Everest, but it's probably going to look more like Table Mountain, where we reach the peak and we stay at that position for a period of time, and then we ease ourselves down. That's probably what the mechanics of this restriction easing will look like.
And finally, do you foresee any further stimulus packages that will be party to actually stimulating and getting the whole machine going again?
Yeah, it's quite possible. Like there's been random announcements even during last week. There was an announcement about charities on, I think it was Thursday. Rishi Sunak, the Chancellor, made an announcement. There was an announcement on Monday about startup funding. The government are going to match pound for pound in terms of startups who've raised funds historically successfully. So I think this really is a bit of a moving target. So the answer is yes. I think, people talk about normality. I think you can't, and again, I've used the analogy here before, you can't pull the power cord out of UK PLC and leave it sitting for a period of time and then press the green button and expect it to come back up to full capacity. A lot of moving parts here, a lot of damage caused. Like if you're in hospitality, retail or leisure, your premises may not open properly until 2021. And even the ones that do open may have to enforce social distancing. So there'll be, for example, a restriction on the number of covers in a restaurant. Will you see a football match this side of Christmas? Will you see a concert? Very difficult to know. The answer is going to be yes. But yeah, I think there's more stimulus potentially coming, and really the government and the Treasury will monitor this. The unemployment numbers will be a big barometer as to where they peak at, or what level they stay at. So yeah, it really, there is no rule book for this. We're in uncharted territory.
Okay, well, Martin, thank you very much, and please join us and continue to join us as we continue our coverage in terms of informing you and communicating you on a weekly basis with regards to COVID-19 and other issues. So I'd like to thank Martin Mockler from Evans Mockler for his contribution today, and we'll see you all on the next platform for BITA. Thank you very much. Bye-bye.
Thanks, Paul. Thanks, guys.
Cheers.
Bye-bye. Bye.